Hi, everyone. Thank you so much for joining Jerry and I tonight. I am really excited for us to talk to you about how you can retire using real estate. I was really passionate about sharing this class with everyone because as an elderly millennial, I know a lot of millennials that do not have a retirement plan, and I really want to help get you to the place you need to be before you retire using real estate. So, I'd like to introduce you to my co-host tonight. Jerry Wilson. He is with the Wilson Group. And if you don't know me, my name is Realtor Rashelle. I help people in the Portland metro area down to Salem. I've been in real estate for about 6 years, and I'm currently the Women's Council president in the Portland metro area. But Jerry, would you like to introduce yourself to everybody?
Yes, Rochelle, and thank you for the invite. Jerry Wilson with the Jerry Wilson Group. And this year I'm celebrating my 32nd year in the business. And we've talked in the past, Rochelle, I'm a big advocate of owning residential investment properties and second homes. And over my lifetime, I've either bought or sold 65 rentals, and I've got a portfolio currently right now. So this is one of my favorite subjects to talk about. So thank you for the invite.
Yeah, that's actually your background is a huge reason why I really wanted to partner with you on this because you fully understand what it's like to be the owner of the property, the financing of the property, the shopping of the property. You can really help guide that whole process. And so I just really appreciate your expertise so much. Tonight, we're just going to cover a high level, a few things, kind of just to get you thinking and to put some pins in some of that curiosity that you might have about how to buy investment properties or what does it look like to own investment properties. So we're going to talk about what does an investment property even mean, like what qualifies as an investment property. What's a second home versus an investment property? So some people want to own like a beach house as a second home for themselves, but then also use it as like an Airbnb versus a true investment property that you don't use often as you're as an owner. And then where do you start and where do you buy? So we're going to get started. And Jerry's going to take it away with letting us know like a second home versus investment home. What does that mean?
So thank you, Rochelle. So a second home is a property that you plan on spending some period of time there. It's not going to be your primary resident, but it might be at some type of vacation destination location. It might be something that you live 2 months of the year out of the year and then have some type of seasonal rental. But the textbook definition is that you're going to use this utility as a second home or a vacation home some point in time during the year. And then the investment property is you're truly buying that property for some type of profit down the road, whether that be through rent or some type of passive income or appreciation or some type of tax deduction. But an investment home is basically a rental property. And then you go second home versus investment, pricing has changed. So it's been really an interesting paradigm because over my lifetime, my career, usually second home pricing for interest rate and closing costs have been the same. But since COVID, we have now seen that gap narrow, that between a second home and investment property, that pricing is pretty much the same. And so that has really promoted a lot of second home buyers to actually go out and buy rentals as well. And then there's different qualifications for both programs. On a second home, Rochelle, you got to either qualify for your existing mortgage payment or rental payment, and then the payment for the second home plus any other debts that show up on the credit report. So one thing I want to be clear, you can own a second home, but you don't have to own a primary residence. But again, to the definition I said, you're only going to be spending some time in here, on the second home. It's not going to be your primary residence. And then the advantage with the investment property loan or rental loan is you get to use 75% of the projected rent from the survey to help qualify for the loan. So a perfect example, if you buy a rental property and that rent survey and that appraisal says it's should rent for $2,000 a month, you get to use 75% of that, or $1,500 a month, to help qualify for the loan. So it's a little easier to qualify for a rental property loan because you get to use 75% of the projected rents to help qualify.
Yeah, I think there's a lot of confusion. I have a lot of clients that don't understand the difference and the qualifying difference too, versus like owning a beach house that you sometimes rent out versus owning a true rental property, and like the different down payment requirements with that.
Well, and I think it's a perfect segue, Rashelle, why it's so important, and you'll hear me repeat this theme over this webinar, that to align with a real estate professional and a mortgage lender, so you have a team in place out there that'll help you guide through some of these, maybe first time doing this before, so help guide you through some of the nuances between second home and a rental property. But the best way to start is to put the team together. But then they also want to know down payment requirements, credit score requirements, and debt ratios. So
Definitely.
generally, the down payment requirement for second homes and rental properties starts at 20% down. And so that's kind of the threshold where you don't have mortgage insurance in the loan. We're starting to see some products come back since COVID, because prior to COVID, we could do 10% down second home financing, and that went away during COVID. And when you see loan products come and go, it's the reason is Wall Street doesn't have an appetite, or they have an appetite for those loans. So there was just a lot of challenges during COVID with interest rates and loan products, but now we're seeing some of that product come back. But for today, it's safe to say you need 20% down for a second home or a rental property loan. And then the credit score requirements are going to be pretty much the same, but everything kind of starts at a 700 credit score. And so that's a little different than when you're trying to finance a primary credit score, because you can go down as low as 620 with some type of FHA loan or VA loan. But generally, with the second home financing, investment property loans, you want to be at that minimum 700 credit score. And then again, kind of similar to when you finance your primary residence, your interest rate will be determined from your down payment plus the credit score is how you get to the interest rate. And then the debt to income ratios are going to be pretty standard. I'm going to get a little technical on you. So it's about 43% of your total overall gross income. But keep in mind, again, with that investment property loan, we get to use 75% of that projected rent to help meet that debt to income ratio. So that's why those loans are a little easier to qualify today.
Yeah, and I do, before a lot of people get discouraged and they're like, well, I don't have 20% to put down on a vacation home or a second home or a rental property. There are some other options too, because I know actually quite a few millennials that don't own a home yet. So there's also investment properties where like you could get a duplex and live on one side, right? If it's your permanent residence, and then rent out the other side too. And that's a little bit different. You don't have to have such a large down payment because you're actually using one side as your true permanent residence. Can you talk on that just a little bit?
Well, you're speaking my language. It's one of my favorite subjects to talk about, because I truly believe the owner occupied duplex, threeplex, and fourplex is the most underutilized conventional product out there, just on the fact that you say that you can live in one of the units and still use 75% of the projected rent income on the second unit, third, or fourth unit. And for some reason, we just don't see clients taking advantage of it as much as they have been. But lately, we're certainly putting the word out there that you can own rental property and a primary at the same time, i.e. a duplex, triplex, or fourplex. And then we're starting to see our regulators, and when I say regulators, that's the Fannie Mae and Freddie Mac, that have loosened up a little bit on what is considered acceptable down payment sources, or what we call season funds. Certainly, if you own a primary residence and you're interested in buying a second home or investment property, we can do a HELOC for you and use some of that equity that you already have built up to use for your down payment and closing costs. And that does not have to be seasoned funds. So you can literally close on the HELOC and then start the loan process immediately afterwards to do the second home or investment property. And then also 401ks. Hey, stock market's at an all-time high right now. It's had a really good run for 3 years. So we're starting to have those conversations with clients saying, hey, it's been really good the last 3 years. I don't want to give any of that back. So I want to go into some type of hard asset, which is real estate. And so we're seeing people pull money out of their 401ks to buy investment properties and second homes. And generally, you can go up to $50,000 as the max you can pull off your 401k to put towards a down payment and closing costs. And then obviously traditionally liquidating stocks or bonds is an acceptable a down payment source as well. We just need to make sure that we paper trail. If you have the money over in some type of Charles Schwab or an E-Trade account that you sold Nike, you sold Intel, we just need that paper trail that you liquidated those stocks and equities and it's in your account, and that's an acceptable down payment. But the one I'm most excited for, Rashelle, and then if you would have told me 6 or 7 years ago that cryptocurrency, that was kind of the bad word out there, would be acceptable down payment source. It is now an acceptable source if it's in some type of brokerage account like E-Trade. We're starting to see some of the larger firms, Morgan Stanley and some of the other ones, are starting to get into the cryptocurrency as well. But yeah, cryptocurrency now, if we have the proper paper trail, can be used for your down payment and closing costs. And I did not think we would see that happen.
Yeah, times are definitely changing. What about those that don't currently have a property? So like a HELOC wouldn't be an option for them.
Yeah,
Can't they do a lower down payment if it's going to be their primary residence and then they're renting out the other side versus the 20%?
it's a great question, Ms. Rochelle. And I say the most unutilized product out there is really that FHA, owner occupied duplex, because you literally can get in at 3.5% down, live on one side, use 75% of the other side for the rental. Up until about 18 months ago, you could do 3.5% down on 3 and 4 units as well, but they've changed that qualification on how to do that, so it's a little more difficult. But for an owner occupied duplex and you rent the other side, you can do it as little as 3.5% down, and conventional now is 5% down. So there's been some great improvements to the leverage and lower down payment to promote home ownership and also to promote investment property ownership as well.
Definitely. And then how long are people normally required to live in that said duplex before they can buy another property and then turn the duplex into a true investment rental?
uh, Another great question. Letter of the law is they're going to sign their loan documents, said it's their intent for to be their primary residence for 12 months on there. So, but we also understand that life happens, job change, maybe there needs to be a change for school, or there's a new baby that's been added to the family or family member on it. But the letter of the law says that it's your intent for 12 months. And then if you're on the FHA program, you can only have one FHA service loan at one time. So generally what we see is they live there for about 2 years, build up some equity. We take them out of that FHA loan into a conventional loan because they have 20% down, and then they go use their 3.5% down and buy another duplex. So it's a really fantastic loan program to acquire rental property. And again, we just don't see it utilized as much as we'd like to, but we're certainly putting the word out there that it's available.
Yeah. So if you haven't purchased a home yet, this would be a really great way to not only one, get into a home so you're not paying rent and you're building your own personal equity, but then also you'll be building an investment portfolio at the same time at a much lower entry cost. So definitely something to take advantage of for sure, if that's not something that you haven't done already.
And then self-employed qualifications. I always think this is an important conversation to have, and certainly on my end as a loan officer on it, because it's just a little more to the approval process when you're self-employed, because there's a lot more emphasis putting on the tax returns versus you're not going to have a W-2 or pay stub. So self-employed, they're going to take a 2-year average of your most recent 2 years tax returns. Well, we just literally passed April 15th, the tax filing. Well, some clients have their 2023s filed, some don't. So it doesn't mean you have to have your taxes filed for 2023, but you certainly have to provide us a copy of the extension. So then we're looking at your 2021 and 2022 and see how that self-employed business is doing. And then we're going to ask for an updated profit and loss statement and balance sheet. So it's really important to give your loan officer team and your real estate agent team a couple extra days on that before you go out shopping, because there's just a little more thorough process on the qualification, because that underwriter who signs off on your loan is trying to figure out, hey, is this business stable? And do I know, we know how much that income they had the last couple of years, but is that income going to be the same for 2024 and 2025 and thereon?
Totally.
And then use real estate for tuition funds. Certainly, I've been a proponent of this. I don't think there's a better way to help save for college if there's a new addition to the family, or say 3 to 4 years as you're planning on it, is just think about real estate and what those prices were 18 years ago, or where they were 15 or 10 years ago. So I love having these consultations with couples that have 1 or 2 kids, and they say, how do we pay for our college? Well, why
Mhm.
don't we leverage our real estate portfolio, and especially in our local market, which has really performed well over the last 20 years. But it's a great way to help pay for college, because that 18 years comes up a lot faster than you realize. I've got a freshman in college right now. I know how expensive it is. So obviously would love to help real estate pay for college.
Definitely. And another thing that not everybody takes advantage of or thinks about is buying a house where potentially your kiddo might go to college, depending on what age they are, if they've already shown interest. So like I have friends that have bought houses down in Eugene or in Corvallis that are currently renting them, that will be available once their kid moves down there, because living in a dorm is actually like crazy expensive, and it's saving them money in the long run. And they're building equity at the same time.
Well, I think there's a little bit of a good learning lesson in there as well for kids that are in college and their parents, and to help promote investment and real estate, that they become kind of landlords. Usually, it's going to be their friends living there, so I don't think there's no better way to have a learning lesson than to start young in college and collecting rent from your friends.
For sure. A lot of times people ask me like, where do I buy? What type of property should I buy? Because that tends to be my specialty in this whole journey, right? Especially when you're looking at like, and how does this pertain to retirement? So having multiple rental properties, investment properties will help build your portfolio. Eventually, you should be able to take money out of those. So I know a lot of people that have multiple, and maybe Jerry, you could speak to even your own personal experience, like multiple homes that they plan to use where they receive income from those homes to either go buy other homes or to build retirement wealth with that.
And I've owned many homes in different states, and I currently own property in different states, but I'm always kind of a proponent to own real estate where you kind of your general area where you live. And what I mean by that, in a 60 to 80 mile radius, just because for me, I owned a large portfolio when the crash happened in '08. So there was a lot more things going on. It was always easier for me to work through any issues in my local market on there, because I always had the connections, the relationship if there was problems. When I was trying to work through some issues in out of state, it was a little more problematic because I didn't quite know that market well enough, and just didn't have the contractor relationships and some of the other relationships that I needed to work through that, monumental event. But I generally like to be able to drive to my properties within 1 hour. But that being said, we've had a lot of clients, and I've had a lot of friends that have been very successful in buying property in other markets. And I think property management has really improved over the years with technology. And so if it's the right deal, it kind of goes back to, I'm sure, your message: location, location, location. Then is this a good investment? And then price is always going to be an important part of what those projected rents are. So, but I personally like to be able to drive within an hour to my rentals.
Yeah, I think having it closer for an investment property is definitely, to all the reasons you just said, really important. But for those that are starting out and like they don't have the average price out of my office right now, the average home price is 535. So if you don't have 20% to put down on 535, you might be able to buy a rental in Ohio.
Yep.
And the down payment would be significantly less, and maybe start there, build some equity, and then even sell that property and then buy another property in Oregon that's closer to you. So that's just another way to like build your portfolio. I get asked a lot about vacation homes because I have a house here with my family at the Oregon coast, and I get asked a lot about how we rent it out. Do we rent it out? How do we manage that? All of that stuff. And there's definitely, to your point, some really great management companies that I think charge a very reasonable rate. We're more than happy to pay the 30% we pay for our management company, just to make sure the people that are staying, our guests, are taken care of, and then our house is taken care of, and all the things in between. Because I don't have time to go there and clean and make sure it's like perfect for each guest, right? So that's another thing that's been so great today, is that it's easier to rent out vacation properties and then also to manage them. The kicker is, a lot of times I have clients that want to buy in certain areas and they don't realize they can't have a vacation home there, or like an Airbnb rental. There's been a lot more rules and regulations put in certain counties and city limits about how many properties can be rentals, what type of rentals, and that's also rentals in general, not just Airbnbs. But so that is one thing when you are researching this or getting into it, is to partner with a real estate agent, also a lender, to find out what all the rules are regarding what type of rental you're hoping to have and what location it is, because you don't want to spend a lot of time shopping in one area and then find out the property can't be used for what you're hoping to use it for.
Well, I think you're bringing up a good point too, Rochelle, because landlord tenant laws change from city to city and county to county. So it's really hard to be an expert if you plan on growing your portfolio and you want different properties in different areas. It's really hard to be that expert, where those property managers in those local markets are going to know exactly what the laws are, what the do's and don'ts are. So I think that's important, but it really comes down to the strategy. What's your 3, 5, 10-year, 20-year plan? So I think anytime you invest in real estate, having some type of goal and objective in place is always the best way to start.
For sure. And then the whole conversation tonight is retiring with real estate and how to use real estate properties to retire. What is one way that you would give some advice or help guide the picture for those that don't understand? So like, okay, I own an investment property, but how does that help me retire?
Well, I've always been a long-term investor, but I've also been in on the development side of things, and those are really two different strategies. So I think to really kind of, again, as I repeat myself a little bit, what is your goal, and and to retire at 40, 50, 60 years old on it. And so for me, I've always enjoyed more playing the long game, because markets go up and down on it. And then just from a sheer attrition, from permit costs to inflationary items that takes to build new houses, only brings up the values of the existing houses as well on it. And then I think also you can kind of bring in a financial planner as well, to say, hey, I want to have a certain amount of my finances in hard assets, but I also want to have some in 401k, some in bonds, some in gold and silver. So I think it really comes down to the individual on it and what that long-term strategy is going to be. But again, I'm going to say, put a plan in place and stick to the plan. If I could say anything over my 32 years or where I started, I've sold a lot of properties too. I have a son that I've had collecting rent since he's 10 years old and he's 19. And so we're already putting my trust together and his long-term plan. And I'm saying, hold on to real estate as long as you can. It's generally a very, very good investment over the lifetime of yourself.
Yeah, definitely. Well, and it's just nice to have a diversified portfolio too, right? Like maybe not all of your retirement funds should be in real estate, but
No.
it's just a great way. And especially for people my age, that maybe haven't been putting into a 401k for very long or been saving for retirement, it's really easy. Retirement's kind of like the gym. You're like, oh, think about that
Yeah.
tomorrow, right? And then
Yeah.
tomorrow comes and something else pops up. So I'm a firm believer that real estate's one way to build equity quickly and to build finances quickly, a lot more than putting a little bit of the paycheck in here, a little bit of there. And like sometimes you can hit it big in the stock market, sometimes you can't. But historically, we've seen in most cases that real estate does grow.
Well, and I'm a numbers guy, so I want to share some numbers. So, and depending on what books you read and what podcasts you listen to, some experts say you put 40% in real estate, 40 in stocks and bonds, gold and silver, and 20 in cash. I like to kind of be a 30, 33, 33, and 33 type person, because sometimes if you have cash on hand, you might find that great stock purchase, or you might find that great real estate buy. So you got to have some money on hand. But I think that's where it's really important to put the team together and have the experts to help that individual on it. But I think it's always important to have that diversification, have some cash on hand. It certainly doesn't hurt you.
Yeah, for sure. So Jerry and I just wanted to kind of touch on the subject tonight, just kind of get everyone thinking about like how you can set yourself up with retirement by doing investment properties. We are both available for consultations or to meet up with any kind of guidance, even quick questions. We're both happy to hop on a call with you or respond by email. Our contact information is here on the slides, but please don't hesitate to reach out. And even if you're not in Oregon, Jerry and I are both in Oregon, but we can help you in states all across the United States. And if we personally can't help you, we definitely know great people that we can partner you with. So
Rashelle, well, thank you so much for the invite. I've really enjoyed it, and I learned something as well, so I appreciate it.
Thank you, Jerry, and thank you everyone for watching.
All righty, take care.
Bye.